Welcome to the roadmap to becoming a homeowner. I'm Marlon Wilson. I'm the owner of Swift Mortgage Lending and Swift Prime Properties. I'm based in Texas. I'm able to service Houston and Dallas, San Antonio, and also Austin, Texas. I specialize in helping first-time home buyers as well as people purchase new construction properties. Why you want to work with me? I've been doing this for over 10 years. I specialize in helping clients purchase homes with as little money down. Typically, most of my clients are able to purchase properties for less than $3,000 out of pocket. Here you can see a few of my clients has recently closed on properties. Most of these clients were able to purchase homes with no money down. And I'm going to show you exactly how you can too. So why does owning a home matter? Well, the first thing is you're going to be able to build equity versus wasting money. When you're renting homes or renting apartments, you're spending a lot of money that's going straight in the trash. When you own a home, you're going to be able to build that equity and just be able to have something that you can call your own. So let's take a look at it, renting versus owning. So when you're renting something, whether it's an apartment or a home, all of those payments that you spend, they're going in the trash. If you have a monthly payment of $2,000 a month, in a year, you literally throw away $24,000 that could be used to go towards a home. Now, when you're owning a home, that $2,000 you pay a month will go into building your equity. What does that look like? If you own a $300,000 house and you're spending $2,000 a month into it, that $300,000 balance is being lowered every month versus going in the trash. Now, if this money is being used towards your equity, you're able to take that money out and use that in investments, use that as savings, or just to help, but you're not wasting the money as if you were renting a home. So what I want to discuss today is the three key factors and to be able to qualify to buy a home. That is going to be income, credit, and your debt. First, we're going to talk about employment and income. The employment that we look at is going to be either W-2 or 1099 if you're a self-employed person. So we're going to look at your annual W-2s from the most previous years. As of today, that would be 2023 and 2024 to see how much you make annually. If you're self-employed, we're going to use your tax records to do this by looking at how much you gross annually. We're then going to look at your pay stubs to see how much you're currently making. And then also you have to have at least 2 years of employment history. As far as your credit score goes, we start with a 580 credit score. Now, 580 credit score is going to allow you to be qualified for down payment assistance or an FHA loan to where you could put 3.5% down. 3.5% down is roughly $7,000 for a $200,000 house, $10,500 for a $300,000 house. And, I can help with that calculation if needed. So you definitely want to kind of focus on having a good credit score. Most of the people that don't qualify to purchase with me typically don't have the best credit. If you don't have the best credit, I have different programs and different credit experts that can help assist you to get your credit score higher. Then lastly, we're going to look at debt. The debt that we use is student loans, auto loans, installment loans, credit cards, right? So we look at the minimum monthly payment. So if you have an auto loan and let's say the balance is $20,000, we look at the monthly payment. So if that's $400, that's what we're going to look at. If it's a credit card, you may have a balance of $2,000, but we're just going to look at the minimum payment that you have to pay every month, which is typically around $25, $50, $75 per credit card. If it's an installment loan, we're going to look at whatever that monthly payment is for that installment loan. So if it's a $1,000 loan and they're actually pay $50 a month, we're going to look at that. We're then going to look at FHA. So I'm going to give you an example of an FHA loan. We look at 57% of the debt to income ratio. So on this example I have here, if you have $2,000 worth of debt, right? And when I say $2,000 worth of debt, I'm talking about monthly payments. So let's say you have $1,000 in student loans, a $500 auto loan, and $500 worth of credit card debt. You're looking at $2,000 in debt. And if you make $5,000 a month in income, that will have you at a 40% debt to income ratio, which will qualify you to purchase. Okay, so now let's talk about savings and down payment. For an FHA loan, your down payment is typically going to be 3.5%. For conventional, it goes down between 3% to 20%. And with VA and USDA, it's actually zero down. Also, there are down payment assistance programs, which a lot of my clients utilize, which go down to a 580, but the higher the credit score, the better the down payment assistance program. Literally, with down payment assistance, you can purchase a home with no money out of pocket. Getting pre-approved is easy. All you have to do is complete a loan application, and I can send you one over. I'll give you my contact information at the end of the webinar. Within that, you'll do the application, which typically takes my clients around 5 minutes, and then you'll upload the documentation that was requested, which should be your W-2s, driver's license, pay stubs, and bank statements or whichever account that the down payment will come from. So after you've been pre-approved, we'll start looking for the perfect home for you. So what this looks like is you're going to break down and explain to me exactly what you're looking for, right? I want a 3-bedroom. I want a 4-bedroom. I want a primary on the first floor. I want a large backyard, whatever it may be. You're going to let me know exactly what you're looking for. And then we're going to start our home search. Then after we find the home that we're looking for, we're going to put an offer in. Now, it's very important to understand whenever we put an offer in, you are, for new construction, going to be required to bring between $500 and $3,000 down. I'll let you know that before we start searching. And if it's a resale home, it's typically going to be 1% of the purchase price. So if the home is $240,000, you need to put a deposit down for $2,400. Now, keep in mind, if you're using down payment assistance, this $2,400 or whatever down payment you put down, you will receive back as a credit at closing. But to take the house off the market and show that you're serious, you will have to put a deposit down. So once your offer is accepted, you then go under contract. Once you're under contract, we're going to hire an inspector to make sure that the home meets all standards and that you're purchasing a home that's in good condition. Now, the only thing we're waiting on is your final loan approval. So after we have our appraisal, inspection, and all of your docs has been uploaded, the underwriter will start reviewing your documents just to confirm everything is legal and legit, and confirm and answer any questions that are needed to make sure that you have the full final approval so that we can schedule a date to where you can close on your house. Now, we finally made it. This is closing day. This is the day we celebrate. This is the day that you will get the keys to your new home. So all you need to do is show up, have your driver's license, and be ready to sign the documents to give you home ownership. So a few myths that I hear all the time about purchasing a home, I want to kind of go over with you, right? A lot of people think you need 20% down to purchase a home. That is not true. As I mentioned, most of my clients are able to buy homes with no money down. Typically, it's going to be 50% that are going to be able to qualify for no money down, and others that's going to have to qualify for 3.5% down. That's going to really be determined by the person's credit score. Another myth is I can't buy a home with student loans. I get this all the time. As I mentioned before, when I discuss debt, it's not about you having debt. It's about qualifying you to purchase within that price range. So we find out you have student loans, that just is going to determine how much you qualify for, but that does not mean you will not qualify to purchase a home. Lastly, a lot of people think this process takes forever. This process usually takes between 3 and 5 weeks. So once you find a house, typically we're able to close that home within 3 weeks of you finding it, and you'll be into your new home. And so out of all these myths, the truth is there are different loan options for every different person. So once I see your information and go over your W-2s, your pay stubs, and your credit, I'll be able to determine what loan program is best suited for you to see how much you'll need to purchase a home. So a few things I want you to avoid while being in the home buying process. The first thing is do not make large purchases. During these 30 days, don't think about using your credit or anything or even your savings to make any large purchases. Secondly is you cannot change jobs. If you do change jobs, please let me know, and also make sure that the job is going to be an increase in pay versus a decrease in pay. And then also you want to make sure that your credit is the same as it is when you were approved. So you don't want to do anything that'll jeopardize or drop your credit score while you're in the home buying process. So if you're interested in getting started, all you have to do is reach out to me and I'll be able to send you the loan application. You can call or text me at 832-932-6499, or you can send me an email at marlon@realestatemarlon.com, and I'll email you the loan application link so that we can get you started. If you have any questions, I look forward to working with you. Please reach out to me today.